Hi there, welcome to REIT Pulse's very first edition of our REIT analysis segment, where what we're trying to do here is to share more insights on particular REIT based on their recent announcement or recent results, so that investors and readers and YouTubers who are watching this video and who are reading our site will be able to gain more insights on the REIT itself and hopefully educate you more about REIT investment. But before we begin, we would like to clarify that we are not financial experts or professionals that will provide you with any recommendations, sell or hold any shares. So before you invest in any REITs or shares, please do your own due diligence and homework and research before you put your money into the stock market. All right. So the REITs that we are going to discuss today will be Atrium REIT, and based on their recent annual report released, which is the 2019 annual report. They have a 31st December 2019 year end, so whatever we discuss here will be based on that particular cutoff date, right? And we may throw in some of the recent updates that we see, but our basis will be at the 31st December 2019 cutoff point. So, for those who are new to this REIT, Atrium REIT was listed in the Bursa Malaysia Exchange on 2nd of April 2007. And it's basically an industrial REIT, and they have properties across Malaysia. 5 of it is located in Selangor and 1 over in Penang, which was recently acquired back in 2019 towards the end of the year. So as at the date of the inception in 2007, they have an asset under management of about 154.8 million, and it has grew up to 410.3 million in 2019. And if you were to look at the 6 properties that we have here in this table, the recently acquired building, which is the Atrium by the Pass 2, located in Penang, is the biggest part compared to the other properties here. So we would expect this particular property to contribute more on the income going forward and hopefully help increase the distribution to the investors. Here is the things that we'll be covering in this entire video. We will be talking a little bit more about the financial performance on a very high level basis. Then we're going to discuss a little bit on the occupancy rate, the gearing, the distribution per unit of Atrium REIT, the valuation of the REIT, and lastly on the growth opportunities of this REIT. Let's move on to financial performance itself. So basically, if you can look at this chart of the net property income, you will notice that the NPI has been growing from 10.9 million in 2015 on a very stable and increasing basis up to 21.4 million in 2019. Well, if you were to look at the recent growth from 17.3 million in 2018 to 21.4 million in 2019, the growth is pretty substantial. And the main reason for this growth is due to the increased contribution by Atrium by the Pass 2, which we mentioned earlier, where they recently acquired this building in Penang in late 2019. So basically, the increase here is pertaining to the additional 3 months of NPI pertaining to this building. So going forward, we will be expecting the 2020 NPI to further grow, because in 2019 itself, it only reflects 3 months of performance. But in 2020, it's going to show the full 1 whole year performance of Atrium by the Pass 2. Well, another interesting thing about this newly acquired building, Atrium by the Pass 2, is that it's entered via a triple net lease arrangement. For those who are not sure what this arrangement is all about, let me quote Investopedia. This is a very quick screenshot that I took from Investopedia itself. So a triple net lease arrangement is a lease agreement on a property whereby the tenant or lessee would pay the expenses of the property itself, for instance, insurance, maintenance. So in a way, this will actually be beneficial to Atrium REIT because it helps to reduce the expenses, but at the same time increase their revenue, which ultimately will increase their net property income. So if you were to look at the performance in 2019 itself, you can see that the revenue itself grew from 18.8 million to 22.9 million, which is a 22.3% growth. But if you were to look at the property expenses itself, the increase was only about 1.7%. So can you see the substantial difference between the increase in revenue and property expenses? This is mainly due to the fact that the building acquired was on a triple net lease arrangement. So we increased the revenue by a huge amount, but expenses are mainly borne by the tenants, and hence very small increase in the expenses. This is pretty favorable to Atrium REIT, I would say, depending on how you look at it. The tenant, which is Lumilex Malaysia, could potentially negotiate for a lower rent when they first enter into this arrangement, given that they bond more property expenses, right? Now, in terms of occupancy rate, as at 31st December 2019, Atrium REIT has a pretty strong occupancy rate of about 100%, where all the 6 properties that they own are all fully occupied, which is a very good thing. The expiry itself ranged from 2020 up to 2034, which is quite a huge spread, I would say. The only areas that would be of concern and of importance for an investor to notice would be the lease which are due to expire in 2020 itself, which is the one pertaining to Atrium USJ, for SAF Holland, and CJ Central Logistics Central Berhad for Block A and Block B. They are due to expire in August and December this year. So the concern would be that given the current condition on the restricted movement order and the COVID-19 development, we are wondering what would the tenant negotiate with Atrium REIT. They may ask for potentially a lower rent due to the current economic condition, or who knows, they may even cease operations here or cut down operations and move building. So this could be a potential area that investors need to focus more on. And for now, it will be a question mark area till the upcoming updates from the management itself. Looking at the gearing itself, the permissible gearing allowed by the Malaysian authorities is about 50%. Alright. As at 31st December 2019, Atrium REIT has a gearing of about 39.21%, which is way below the permissible limit, which is a good thing because it actually allows the REIT itself to further acquire new buildings, and they have a leeway of growth in a way to further borrow money and invest in properties to help increase the wealth of the investors, right? Looking at the borrowing itself, all the borrowings are entered at a floating rate arrangement. What it means is that the interest rate are not fixed and depends on the market. In the event that the interest rate increase, it will be adverse to Atrium REIT, but in the event where it drops, it could be potentially favorable. But given the current announcement by the Malaysian government, where the Bank Negara cuts key interest rate to 2.5%, and this reduction of interest rate would be potentially favorable to Atrium REIT in general, I would say. In terms of distribution per unit, this is definitely an area where investors will pay attention to because it involves our dividend, right? The distribution per unit has been in a wavy length where it drops in 2016, then increase in 2017 and 18, and drop again in 2019. Now, here's what we're going to do. We are going to dissect why the DPU drops and why it increases, and etc. to check whether this distribution is declining due to performance reason, or is it a one-off event that contributes to the decrease or increase. All right. So from our analysis itself, we noticed that the decline in 2016 from 8.25 to 5.9 was mainly pertaining to a one-off gain on disposal of one of the buildings back in 2016 called Atrium Wang. So upon the disposal of this building, there is a gain in proceeds of about 4.3 million. And if you divided this by the total units of shares, is about 3.5 cents per unit. This additional 3.5 cents of proceed was subsequently declared to the investors. And this is why in 2015 itself, the distribution per unit is at 8.25 cents. For a better apple-to-apple comparison, we have decided to less out this 3.5 cents from the 2015 distribution of 8.25 cents, and it comes out to about 4.75 cents. And factoring in this amount into the entire graph, it will shows you that the distribution per unit from 2015 to 2018 are actually on an increasing trend still. And the only reason why it increased in 2015 was because of this one-off gain. So now that we understand that the distribution per unit on performance itself actually grew from 2015 to 2018, excluding the one-off gain, what happened to 2019? Because if we look at 2019, it actually drops to 6.63 cents. So what happened is that in 2019 itself, there is an acquisition of Atrium by La Paz 2, and to fund this acquisition, there is a placement and right issue raised. And as a result, the number of units of shares has increased from 121.8 million up to 204.6 million. Given that the number of units has almost doubled, however, the rental income has not fully been reflected in 2019 itself, given that the acquisition was only made towards the end of the year. Going forward, we will expect this number of MPI to be higher when it reflects the full year income and is spread across the number of units of 205 million. And hence, the DPU would likely increase. That would be our expectation of the DPU going forward, right? Now, on the price to book ratio, it's an area where investors look at for the valuation of the REIT itself. The NAV as at 31st December 2019 is at about 1.266 ringgit, and based on the current trading price of 4th April 2020, which is the video date I'm recording this, the price is about 93 cents. And based on this price, the price to book ratio is about 0.72, which is an indicator that the REIT is pretty undervalued as compared to the NAV. But of course, as investors, this is not the only factor that we should be looking at. Now, for the last part on growth opportunities, as of 31st December 2019, Atrium REIT has entered into 2 conditional SP agreements. And the first one is to acquire 2 pieces of land in Penang, where they have an agreement to lease the property back to Lumilex Malaysia for another 15 years. And the second conditional SPA is to acquire another 2 pieces of land over in Selangor. Upon the completion of this acquisition, it would increase their AUM from 410.3 million up to 505.3 million. That's about it from us on Atrium REIT. If you like what you see, do hit the like button and subscribe to our channel. Now, do also follow us on REITpulse.com, where we share a lot of guides on REITs, as well as sharing on analyses of REITs based in Singapore and Malaysia as well. Do follow us on Facebook and Instagram with our username REITpulse. Thank you.